Bitcoin is such a Boolean outcome where if Bitcoin fails, that's one kind of history path. And if Bitcoin is highly successful, that's a very different uh, history path, which includes macro. So I think actually a fundamental question in macro, especially long-term macro, not this year, but looking out 10, 15 years, one of the flowchart questions you have to answer near the beginning is Bitcoin like a multi-trillion dollar equivalent asset by that point, or is it stagnated or dead? Basically, 2023, you should know a decent amount about Bitcoin.
Looking at the future of Bitcoin, it is clear that this digital currency is more than a fleeting trend. Its potential to reshape your financial landscape is immense, with technological advancements continually pushing its boundaries. Macroeconomics commentator and author Lynn Alden is expressing bullish sentiment on Bitcoin over the coming months. For her, Bitcoin presents a potential solution rather than merely highlighting problems. Bitcoin's evolution from a volatile digital asset to a viable financial instrument marks a significant shift in your economic landscape. Its journey, filled with ups and downs, has reshaped your understanding of digital currencies and opened new avenues for financial transactions and investments. Lynn Alden is fascinated by Bitcoin's ability to withstand challenges like technical issues and regulatory hurdles. Unlike typical assets, Bitcoin has repeatedly recovered from substantial price drops, reaching new peaks. Volatile Bitcoin rocketed from just over $5,000 at the start of the pandemic to nearly $68,000 in November 2021, according to FactSet, a period marked by a surge in demand for technology products. Prices fell back to earth during an aggressive series of Federal Reserve rate hikes aimed at taming inflation and then the collapse of FTX, one of the biggest companies in crypto. Bitcoin is once again having a moment. On Monday, the world's largest cryptocurrency soared past $41,000 for the first time in over a year and a half, marking a 150% rise this year. Looking ahead, Lynn Alden expresses a bullish outlook over a 2-year time frame. Factors like the ETF news, Bitcoin halving, and its correlation with global liquidity support this view. Let's move towards the video to understand more about this. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
What I found interesting about Bitcoin is that, I have been following Bitcoin loosely ever since roughly it came out. I mean, a year or two after it came out, I had heard about it. I had liked the idea. I'd never been one of those like antagonist people towards Bitcoin. But when you hear about like a new digital money, when you kind of place odds on what's the chance this thing's going to be actually a giant deal, it's low. But after it's been around for 14 plus years, it's been through multiple cycles. It's had various technical challenges thrown at it. It's had various regulatory challenges at it. It's the only asset I know of that has declined in price by at least 75% on 3 separate occasions and came back to new all-time highs. Most of the best stocks in the world managed to do that maybe once. And so it's basically it's got a resilience to it that I did not necessarily anticipate in the beginning. And so, if you just kind of keep running into it, you get interested in it. And for me, it's a potential solution to the set of problems that I analyze. So instead of always talking about the problems, I can now focus on solutions. And then secondarily, because my background is that blend of engineering and finance, the idea of merely trading around assets is, there's a that's an important market function, but it's not something that I necessarily find a lot of meaning in. I generally find meaning in either building things or educating. So I've generally been suggesting that zero allocation is not the right number, that there's a really big range that can make sense, and zero is probably not that number. Is kind of my first point. A second point I say is, just learn about it. Like basically, 2023, you should know a decent amount about Bitcoin. Even if you're just trying to, if you're a bank investor, you want to know, could this thing impact banks? If you're a gold investor, can this thing impact gold? If you're a tech investor, how is this tech relevant for anything I might be building, right? So it's just something that again, it's the first asset that I'm aware of that ever had 75% plus drawdowns, some of them much more severe than that, and recovered to new all-time highs. And so if you're still writing it off, you probably shouldn't. You probably should understand it. You probably should consider having a non-zero allocation. I'm generally bullish with a 2-year view. A couple reasons for that is one, I think the ETF news is probably beneficial for demand. The halving is still material in terms of just overall kind of new supply flows. And three, Bitcoin is historically heavily tied to global liquidity. Um, and there's multiple ways to do that. Michael Howe from Cross Border Capital focuses on that, so he's got a very sophisticated method of doing that. The more baseline one is just global broad money supply denominated in dollars. When that's going up, or the rate of change is going up, normally Bitcoin's doing pretty well. If that's going down or being flat and therefore being negative in kind of year-over-year terms, normally Bitcoin is not doing that great. We've gone through a pretty significant period of stagnation. I probably think that while I don't know what Bitcoin or liquidity is going to do in a 6-month period, I think they're both probably going to be higher 2 years from now, along with those other factors we mentioned. So I'm pretty comfortable with that kind of time frame. And then longer than that, I think it's mainly a matter of, is it having higher highs and higher lows? Is the UX getting better than it was a year ago, 3 years ago, 5 years ago? Um, uh, you know, are is it solving problems for people? Is the education around the asset getting better? Those types of more fundamental things are what I'm kind of analyzing. Is the network more decentralized or less decentralized than it was 5 years ago? And if so, by what metrics? Is it mining centralization? Is it node decentralization? Is one of the things that's probably not covered enough is supply chain decentralization. So is every chip coming out of one foundry, or is there multiple foundries producing chips? There's multiple ways to kind of measure security, decentralization, and adoption. And I think those are the metrics to probably focus on over a multi-year time frame.
Lynn Alden acknowledges money's historical imperfections, considering perfect money an elusive ideal. She highlights a pivotal change in finance during the telecom era, with the widespread adoption of telegraph technology in the 19th and early 20th centuries. The US dollar is barreling toward a 3.7% loss this month against a basket of 6 major currencies in what would be its worst monthly performance in a year. Expectations that the Federal Reserve may reduce interest rates earlier than anticipated next year have been a critical support point for crypto prices, fueling a drop in the dollar and boosting the appeal of risk assets. Lynn Alden expects the dollar to remain influential for decades, but notes uncertainties that might speed up or prolong this time frame. She highlights Bitcoin's potential success as a crucial factor shaping the future of finance. Next, let's delve into the video to explore Alden's perspectives on the economy's future.
To some ways, money has always been imperfect. Perfect money is a platonic ideal that's always reached for but never achieved. The state that I consider money to be broken is really in the telecom era. So basically, ever since the invention and specifically the adoption of the telegraph. So it was invented in the 1830s, but it wasn't really deployed in a cross-continent, cross-ocean way until the 1860s, and then it even took to the early 1900s to get, kind of worldwide across the Pacific and elsewhere. And ever since then, obviously we've sped things up. We have other digital technologies, but we're in this telecom environment. So that, you're talking a century, century and a half. And that's a period where transaction speeds and settlement speeds were completely divorced from each other in a way that had not previously been um, the status quo. And that's kind of the period that I consider to be the modern era of finance and this kind of specific type of brokenness that I'm talking about. That basically there's such a mismatch that credit and abstraction becomes at the core of the system. And so basically, how long can something stay broken? In various ways, the answer can be a century and a half or more, right? And so when we look forward, um, I think the dollar is going to be around in some meaningful form for decades. There are nonlinear aspects to this, so there are things that could completely shorten that or things that could completely extend that, like whether or not you kind of reset the system and have a whole nother cycle ahead of you or not. And again, part of it is did Bitcoin succeed or not? Because if there's no alternative, then when something breaks, it can be reconstituted in a slightly altered form and have a whole another 50 years, 100 years. Or if Bitcoin exists and is functioning and is kind of unstoppable, then maybe the dollar system fails sooner than that. But either way, I think that the dollar system is such a powerful, large network effect Depending on how you define it, it's at least tens of trillions of dollars. All the structures built on top of it. I mean, we're talking, hundreds of trillions realistically. And that's a ship that turns very, very slowly. It's not like an emerging market currency that can break in a year. That is a very kind of powerful thing that I think is going to be here for decades. I think another question to ask is what phase of breakage would the dollar kind of have almost like emerging market characteristics, like inflation that they can never quite get down to their target no matter what they do because the overall kind of debt is so high that any sort of meaningful interest rates completely blow out the deficit. Those aspects I think could be sooner. I think we're seeing tastes of it at the moment, but that doesn't mean they can't get it necessarily under control in this cycle. Um, but I think that we're kind of in that earlier phase where some serious developed developed market currencies behave in some ways like emerging market currencies around the margins, and I think that period could come and go. It could be a recurring theme, and I think that's a longer phase before you get to any sort of failure modes with these major currencies.
Over the last 15 years, cryptocurrency has become a global phenomenon. For better and worse, cryptocurrencies have made headline news, become legal tender in El Salvador, and been the subject of several congressional hearings. However, Bitcoin and a few others have maintained consistent dominance. What is your stance on whether Bitcoin is the only solution to financial problems? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.